This is eSec Lending Insights. Let's get over to our episode.
Jim, I want to start by wishing you a happy new year because it's the second week of January and I know that sort of stuff annoys you.
Yeah.
This is Happy Monday.
Ah, yeah, I've heard that before as well. In fact, any happy.
Happy New Year.
Matt, I had a special moment this morning. Jim, every morning, listeners, our company does a brief all-company call that our fearless leader, Mr. Craig Starville, leads. We go around the virtual table and hear from different groups. Jim's group goes every day. My group goes every day. And on Mondays, we get to hear from Jim. And so normally that's a real fun day to hear from Jim because he comes in with a different mode. But today, his audio was all sorts of robotic and no one could hear him. And so he decides not to go and instead messages me what he would otherwise share. And he's basically asking me to give his update. And I take it as a moment to ask whether I have full artistic license and his approval to give the Jim update and whether I can take liberties with how to share the information he would like to impart in the rest of the company. So it's a pretty special day for me.
Yeah, 100%.
I gave it to you. I thought you were
Then
gonna,
I sort of felt the pressure. Then
you threatened to use a Jim voice and give my
I don't-
update as if you were me. And I was really curious to see what that might sound like.
I think it's more what I would have said. You got to give me a moment. Maybe I'll switch into it to the podcast just to sort of keep it
Okay.
interesting. Matt, good to see you. It's 2026. Woo-woo.
Yeah, you guys too. Happy New Year
Yeah.
again, Jim.
Yeah, it's the same to you. I'll say it all month. I don't care. Happy New Year.
All right. So talk to us, Mr. Chessum. You and your friends at S&P Global Market Intelligence have been publishing all sorts of market updates on both performance of full year 2025, partial year 2025, Q4 2025, and then curious if there's insights. We're only 2 weeks in, I guess. So it's a little putting you on the spot for what you guys think the data would say in terms of ongoing trends for 2026. But that's what this was all about. We're here to dig into the data, dig into the numbers.
Yeah, well,
And
sure. Look,
I know you have thoughts on how you want to handle this. So maybe you can take over and take the reins.
I do. So let me start with a summary and then I've got 5 fun facts from the securities lending market in 2025. I've also got 5 fun facts from the year 2025 because I know that you like this podcast to be educational. So I thought, why not learn something
Okay.
else along the way?
Can we be the judge of whether or not they're actually fun?
No.
Yeah, I think you should have just said, Brooke, we will be the judge. Don't ask. Just tell
Yeah,
them
I'm
we will be the
100%
judge of
judge.
what is fun.
I'm a
Right,
judge of whether
fair
they're fun or
enough.
not.
Fair
Right.
enough.
So high level summary, 2025. Wow, what a year. 14.9 billion in securities lending revenues, about 666 million in financing revenues, and about 2.2 billion in cash reinvestment revenues. If you look over the year, revenues really started ramping up from about Q2 onwards. And Q3 was the strongest revenue generating quarter of all time, generating $4.4 billion worth of revenues for the lending market. Average fees for the year were 47 basis points. That's up from 43 basis points in 2024. And they actually surged to just above 55 basis points during Q3. Now, average lendable, we all know that equity markets were climbing throughout the year. The average during 2025 was about just over 44 trillion, but December's lendable closed at 48.5 trillion. And when I looked this morning, we're at 49.7 trillion. So lendable has really been rising over the last year as well. Top revenue earners, if you look at the top 10, they come in at $1.148 billion worth of revenues alone for the top 10 highest revenue generating securities. That's versus about 873 million in 2024. I don't suppose these are going to be any surprises to anybody. CoreWeave was a massive 757 million. Paramount Skydance, 115 million. Infosys, which is an ADR, 95 million. Cattle, ticker 3750, 91 million. And Nano Nuclear Energy, NNE, 90 million. The top 10 alone really blew the doors off this year, and that was all down to the impressive numbers that came out of the CoreWeave deal. If you look at equity markets in general, US equities really supercharged in 2025 by their second highest year for specials revenue on record. 2025 generated about 3.5 billion. The highest year was 2023 with a very close 3.57 billion. But Asia was really the biggest gift that 2025 had to give. Asian equity revenues increased 54% year on year, about 3.3 billion. Hong Kong was by far the largest contributor to these revenues, with 134% year on year growth, generating $914 million alone. Average fees were up in Hong Kong 22% year on year to 1.84%. And September was by far the strongest month, generating just over $115 million in Hong Kong, which was a whopping 324% increase year on year.
So was Hong Kong the market in Asia that had the greatest contribution to revenue return, or was it the market that was up year over year, the highest amount?
Both.
Both.
Well, it
Okay.
wasn't. I say both. It wasn't because, of course, you've got South Korea.
Right. That's what I was.
Revenues
Okay.
increased about 415% year on year.
Sure,
I
but
think in
that's
South Korea.
because they were non-existent the prior year.
Yeah, that's because they were so low the
Sure,
previous year.
sure.
That's correct.
What did you say Hong Kong was up year over year?
134%.
134%.
Oh, wow. What was the 22% number then?
Average fees.
Ah, okay.
So they went up to 1.84%, which is pretty impressive. Outside of that, we said South Korea experienced sustained strong demand. Revenues increased 415% to $598 million. That was pretty much after all that pent-up demand after the short
Right.
sale ban came through.
What did Taiwan do overall?
So this is where it's interesting because there was incredibly strong news flow about Taiwan throughout the year in terms of geopolitical events, trade tariffs, and alike, but none of this really acted as a catalyst for stronger securities lending revenues. 2025 saw revenues in Taiwan of $777 million, and that's only up 1% year on year. In my opinion, the market to watch and the one that really stood out during 2025 was Malaysia. It experienced 58% growth in revenues to $56 million, 19% in average fees to 542 basis points, and a 34% year-on-year increase in utilization to 6.4%. So I definitely think Malaysia's market to watch heading into 2026.
What are the absolutes on Malaysia, Matt? It's a much smaller market on a relative basis, right?
Yeah, that's correct. So Malaysia last year, 56 million in revenues, up 58% year on year. Average balances were just over $1 billion, an increase of 35% year on year. Average fees, 542 basis points, increase of 19% year on year. Average lendable, that grew 5% year on year to 14 billion. Average utilization was at 6.4%, an increase of 34% year on year. There's definitely more activity taking place.
And that trend of keeping things more or less flat in Taiwan, does that track with what you and the team saw year over year in Taiwan?
Yeah, it felt strong, but we didn't see a
Had
whole lot
lost
of
momentum.
Yeah, I think so. I mean, it's just purely the fact that Korea came online. We saw a jump in Taiwan when Korea went offline. And to see it stay flat is a net win, I think, from my perspective. It definitely took some of these quant guys who were doing pretty active trading in Taiwan, shifted their focus after a handful of months of Korea being online. So, kind of Q3, we started to see Korea ramp up. So I would say I agree with you, Ches, on Malaysia is one to watch this year in 2026. Did you quote the lendable market for Malaysia? What does that look like versus the billion on loan?
Yes, I did. Lendable in Malaysia, average lendable is just over 14 billion in 2025.
Yeah. So there's room for growth. I'm thinking about the scale of that market and whether you can get shorts in decent enough size, but 1 billion on 14 seems low. So you could see a nice growth of balance and maybe fee in 2026. We do see strong from a handful of primes. We see strong bids on Malaysia as we go through auctions for our clients. Not surprised to see the discretionary ramping up as well.
Sure. Well, if you look at other regions, EMEA equities finally came out the doldrums. 1.12 billion in revenues. That was up 12% year on year, but average fees did decline 11% to about 50 basis points. Specials revenues in Europe did increase. 2025 totals were 315 million. That's up from 309 million in 2024, but it's still very far from the dizzy heights that we saw of 580 million in 2020. What was interesting at last year about EMEA equities was very much that it was interesting to see that many of the smaller European countries, in terms of securities lending activity, started producing stronger revenues during the year. Greek revenues were up 55%, Spanish 57%, Danish 87%, Polish 94%. The other interesting thing about EMEA equities was that revenues were actually lower across EMEA equities than they were for the whole of the ETF sector during 2025 as well. As I said, equities 1.12 billion versus 1.158 billion for ETFs. That was
ETFs
interesting.
globally, right?
ETFs
globally. Yeah.
ETFs
Yeah.
exceeded all expectations last year because Bitcoin had one of its most volatile years in a long time. Leveraged ETFs were increasingly
Yeah.
used for hedging and positioning. Saw lots of volatility and price movement in Nvidia and Tesla. They moved a lot on AI sentiment and geopolitical news flow as well. But the interesting thing about the ETF market was really that the Asian ETF market continued to expand, and we saw lendable continue to grow. It was really US ETFs that generated the lion's share of revenues. You could see a lot of growth coming through the Asian ETF space as well. The other asset class that did particularly well, kind of in line with ETFs, were ADRs. 490 million in revenues, up 62%, with average fees climbing 28% year on year to about 131 basis points. Both of those two asset classes, ADRs and ETFs, played a strong role in making last year quite exceptional as well.
Yep. Can we go back to EMEA real quick, Matt? Does S&P Global take a look at the breakdown of what trade type that revenue is coming from?
No, we can't see that, unfortunately. We can only see financing or securities lending activity.
Okay.
But the 1.12 that I mentioned, that was all securities lending activity, no financing included there.
Okay. Got it. Yeah, ADRs and ETFs will continue, I think, to be strong asset classes. The ADR from the book of business that we trade were particularly special around record dates. So it has less to do with div arb and something more to do with over record date supply changes in the street on ADRs. Depending on who your clients are, you're either off loan or going on loan record date at pretty nice levels. So would imagine that continues next year. And ETFs, we continue to see demand for levered ETFs from more pockets of borrowers and pockets of end users looking to get short. And being an institutional lender who focuses on pensions and large asset owners, we don't have a whole lot of those ETFs in our book of business. So I would think a disproportionate amount of the revenue generated by ETFs, especially by levered ETFs, would come from the retail space and retail lenders, which is saying like the sky is blue. It's obvious, but just worth noting. And so it'd be interesting this year. We always see a seasonal pickup in ETFs in November and December. And again, we saw utilization for our book of biz in and around 50% at year end on ETFs, which is pretty incredible if you think about it. More normalized is 25 or 30% out the door.
Yeah,
And
well, that
Matt,
definitely makes sense.
can your data have the ability to break down the inventory supply? I know you can break it down by pensions and by mutual funds and other things, fund company, but can you identify the retail lenders or the retail assets within that?
Yes, we can. We
Okay.
can, but I don't have
And
those numbers to hand, unfortunately.
all right. Well, then you're going to need to come back and give us that
We're give,
breakdown because I think that would be
we're give,
interesting just to see how that's changed, maybe year over year, but even more so over a 2, 3, 5 year horizon, just because I think it's probably pretty meaningful in terms of both growth and lendable assets contributing to the market, but then also percentage of revenue and how that's changed over a time horizon.
Yeah, so we produce a beneficial owner data dashboard on a quarterly
Okay.
basis. And I seem to remember looking at the Q3 one, there was a significant increase in both lendable and revenues that were coming from the retail sector. So it's definitely
Yeah.
growing.
Yeah. I wonder how much it's growing and on a proportional basis, how meaningful it is compared to the institutional space and when those triggers have happened would be really interesting.
Let's move on to fixed income markets. Fixed income markets remain strong over the year. Government bonds produced $2.28 billion of revenues. That was an increase of 12%. Corporate bonds produced $1 billion, which was an increase of 4%. In the government bond space, emerging market and Asian government bonds saw the largest growth in revenues, up 295% to $75 million for emerging market bonds and up 42% to $153 million for Asian government bonds. I think average fees remained relatively flat across the developed countries. EMEA saw a slight uptick, mainly thanks to UK and French government bonds. Average fees in Asia grew, however, by about 8% to an average of 20 basis points, but I think that was mainly thanks to Japanese and Australian government bonds, where they've had some changes in interest rates and where there's been a bit of uncertainty about future fiscal policy. Corporate bond balances, as you've probably seen and you're well aware of, they've just grown massively throughout the year. But there was a very similar trend last year to what we saw in 2024 and 2023, where balances have continued to grow at pace, but average fees continue to decline. Utilization, however, has increased by about 5% year on year, and it's remained above 6% throughout 2025. So I don't know about you, Jim, but in a nutshell, I'd say 2025, I'd sum it up by saying, wowzers, what a stonker.
Yeah. Yeah.
Hold
it
on.
was a
What a
good year.
what a water? What a
What
water?
what a stonker of a year.
And that's a
It's
good
pretty close to stinker, isn't it, Brooke? Which for us
So that's
is
what I wondered. Is that
negative, but
is that a positive?
It's definitely a
stonker.
positive. It's a strong
Yeah.
positive.
What does it mean?
Well, like, good, brilliant,
Okay.
A
impressive.
blowout. Yeah.
Yeah, there we
Do
go.
you know that, Jim? Are you familiar with a stonker?
Only from talking to my UK friends. I haven't used the word before.
It's your goal in January. Use it once.
But I am aware that it's generally a good thing if it's a stonker.
Okay. My years
Jazz-
of having UK friends, I have not stumbled across that one. So I will tell them that they're letting me down.
Chaz, do you have U.S. government specifically data in front of you?
Let me have a look.
When you quote the government revenue, that is just intrinsic or that includes cash reinvest?
That's just intrinsic.
Just intrinsic. Okay.
So I've got America's in front of me, and the vast majority of that is US Treasuries, to be honest. Like Canadian revenues were pretty small. So 1.4 billion during 2025, up 8%.
8%. Yeah. Okay. It's good growth. And then the EM bonds, this may be an unfair question. I don't know if you know it, but when I think of EM bonds for our program, it's mostly globally registered bonds. So Reg S or 144A that are registered by, say, government of Ecuador and denominated in dollars or euros, as opposed to local currency. Do you mix the two? Is there a local currency market underlying in that EM bond data, or is it mostly the global bonds? If you don't know, put it to your list of takeaways and homework you need to do.
I would imagine it's the latter rather than the former.
Certainly for like Japan and Australia, that's the local that you're talking about. That's not globally. They don't register them globally in dollars. 100%. But just curious about that EM number. And we've seen good growth there in both supply that we have as well as demand. And so that translates into more revenue for us in the EM bond space. Just curious if there are underlying local markets driving that revenue. Would that be kind of the downgrade trade? I can't think of any emerging market bonds that would help with the downgrade trade in that they're not HQLA generally. Just thinking of EMEA in general, not just EM bonds and kind of what's there. So yeah, it should be fun this year.
I feel like I missed, and we haven't done your fun facts yet.
Yeah, no, let's move on to the fun facts. Let's move on to the best bit. I feel like I need some sort of jingle or something to move on to the fun facts thing. Right, Brooke. We've done the securities lending part. Let's start with the fun facts of 2025 part. So, Brooke, choose a category: science and technology, environment and energy, sports and culture, the number 2025, or everyday life and history.
Oh, goodness gracious.
Wow.
Okay, that's a lot of categories. Let's do the last one. What was the
everyday
last
life and history?
Everyday life and history for 2025?
Yeah,
everything's 2025 based.
Everything is 2025 based. So life expectancy actually began rising again in 2025 after years of stagnation, thanks to medical advances. So that's good news for us all.
Can I pick one?
Yeah,
it's one.
About fun fact, sports.
Sports. This is a particularly good one. So women's sports triumphs of 2025. Now, England's Lionesses, who are the football team, won the Euros, and the Red Roses, who's England's rugby team, won the Women's Rugby World Cup. Both sporting events set viewership records for women's sports, with 16.2 million people tuning in to watch England's Lionesses win the Euros, and 12 million tuning in to watch England's Red Roses win the Rugby World Cup.
Those are big numbers. Those are
Yeah, it's good.
NFL-like
numbers.
numbers for you, Brooke. Sorts of numbers.
Thank you, Jim, for making sure that I had perspective on that.
And so, the NFL is our professional football league here in the U.S.
Is that the one that Travis Kelce plays in?
It is, yeah.
And
And
what,
you know
what was his
him.
name? Tom Brady?
And Travis Kelce because he dates a famous pop star.
No, he plays on the Kansas City Chiefs.
But have you watched a Kansas
Taylor
City Chiefs
Swift,
game?
even
I
that. He dates
haven't
Taylor
turned it.
Swift.
I
That's the
haven't
only reason I
turned
recognize his name.
Yes. Good friends are diehard Chiefs fans. So I would have to follow along on the Chiefs games.
Okay, that's legit.
I'm not as painful as you might think I am. Although I like to play a version of being painful when you're around.
Yes.
Okay. And
Here we
are
go,
any
look.
of these securities lending facts, by the way?
Well, let me do one more, and then I'll give you two security lending facts.
You're
that
going
you
to
can
tell us which category you're going to choose?
Yeah, no, I'm just going to tell you the number 2025 because I've been bursting to tell you this because I find this really interesting. So 2025 is a perfect squared number. It's 45 squared. It's also the sum of the cubes of the first 9 numbers, 1 cubed plus 2 cubed plus 3 cubed, etc. The next year to be a perfectly square number is 2116. And the one before was 1936, which was 44 squared.
Nerd alert.
Well, that feels like a very good fact for how square that joke was, or how square this podcast feels.
I thought that was the most interesting.
Yeah,
Just goes to show the
super
others.
interested.
Let
Once
me move
in a
on
lifetime
to
year.
yeah,
Once
well,
in a lifetime.
pretty much right. So let me give you my 5 fun facts of 2025 from the securities lending world. So 2025 generated the highest specials revenues ever of 5.7 billion. That was a total of 38% of total revenues. 2023 was the second highest with 5.2 billion, and 2022 was the third highest at 4.6 billion. So you can see how important specials revenues were to the overall market revenues in 2025. Q3 was the highest revenue producing quarter on record, 4.4 billion, which was up 48% on 2024. That was driven by some of the highest average fees of the year across US and APAC equities, coming in at 106 basis points and 130 basis points.
And that's the highest quarter over your entire data history. Yes?
Yeah, pretty much. It's getting close, if not to one of them on 2008. But that was a very long time ago now.
Right, right.
Hong
Some
Kong,
of us were around then, though.
Yeah. But let's not admit to that. So Hong Kong pretty much smashed all records in 2025. Balances surpassed 60 billion for the first time ever in September. $914 million worth of revenues, up 135% year on year. And average fees, as we said previously, up 22% to 1.84%. Corporate bond lendable inventory surged throughout the year, peaking at 5.28 trillion during December. 2025 average was about $5 trillion. Balances peaked in November at 386.6 billion, and there was a 2025 average of 368.4 billion, which was an increase of 19% year on year. And you might be happy or sad to hear the last one, because it is the last one in my fun facts list. ETFs generated almost as much in October 2025 as they did during the whole of Q1 2024. 120 million versus 125 million. And October was the highest revenue generating month of the year for ETFs, average fees peaking at 94 basis points.
Wow. Okay.
Were they fun? Come on, they were fun. No,
I mean,
just the number
we got
one.
through it. We got through it.
I would call it work fun. It was more fun than some of the other work stuff we do, but not
I don't
fun
know.
fun.
We have a lot of fun at work, Jim.
Well, come on. We managed to get Taylor Swift in the conversation. And I think every podcast that I've heard from you guys, she makes an appearance.
She does. She does.
And it's lucky that she does, because everybody who listens to this podcast also loves Taylor Swift, because I heard it in the facts.
Thank
I
you.
heard it in the other fun facts that Brooke was telling
our
us in
other
the
fun
last one.
facts. Exactly. Well, this feels like quite a Stoker of a podcast, right?
Stonker. You can't say Stoker. Perhaps we'll weave it in. We'll make that one.
Oh, that's perfect.
It is. Stonker of a podcast.
Hey,
Stonker of
at least I try. I try hard.
Yes.
Yeah.
Generally, and if you don't first succeed, Try again.
We'll have you talking like a proper English person soon, Brooke.
Okay.
Don't worry.
I'll work on it.
That's
Can someone be a stonker? Or is
Mm,
something a stonker?
something is generally a stonker.
Okay.
you're a stonker.
Thanks.
Brooke, not you. Hey, Matt, so 2026, what do you think? Are we going to have a repeat of
Yeah,
kind of
so
record highs?
well, I don't know if we're going to see the record highs. As long as valuations keep going up, and there's nothing to say that they're not going to at this point in time, that's definitely going to help. I think a lot of the things that have influenced 2025 haven't really gone away. We've still got loads of geopolitical risk. We're seeing even more geopolitical risk. It's the turn of the year.
Right.
So there's lots of that, which is not creating that much volatility, but it has the potential to. I don't think we're far away from it. We've seen lots of movements in interest rates, which helps with the volatility in the fixed income markets. We've still got the whole AI story going on, whether it's increased revenues from AI or increased capital expenditure, which is the flip side, causing volatility and movements in share prices. Valuations are still at all-time highs, which means that we're going to see a lot of M&A and IPO activity. So at this point in time, I can't really see too much changing in the near term, but there are some huge risks on the horizon. Yeah, there's a lot of uncertainty out there.
Yeah, we always like uncertainty. It generally translates into good revenue for us and our clients. So we'll take uncertainty.
What do you think, Jim? What do you think? Come on. You can't leave me out to dry.
No, I'm with you. I worry about market valuations. If we saw a downturn of 10%, that's pretty meaningful in terms of the revenue it's generating. A lot of our revenue comes from large cap and GC lending, and 10% down would hurt. I think we're going to continue to see the trends we saw last year. The M&A is right there. We had a handful of deals last year. We should have more this year. So that should be good for the market. Same with IPOs, which it translates into these kind of unicorn names, whether it's in the AI sector like a CoreWeave or otherwise. So we'll have a lot of, in this first half, we'll have a lot of expiration trades. So the IPOs came public and then you wait 6 months for the insiders to have the ability to trade. So as those expire, they ratchet higher leading into that. So that should generate good Q1, Q2 revenue for us. I feel pretty good about it. I think everything that's happening in Asia is going to continue. Hong Kong, I don't know about, but all those benefited from all the placements that they did, all the deals that came. So if that continues, Hong Kong could continue to outperform, which is great. But we'll see growth in Korea for sure this year.
Yeah, look, we just got to have a little bit of luck. Like last year, we saw Paramount, Skydance in CoreWeave. Collectively, they generated about $900 million worth of revenues. So,
Yeah.
that's $1 billion just from 2 deal names, pretty much.
Yeah.
So if we had 1 or 2 or 3 or 4 of those, it makes a huge difference. Nobody can really tell. I wouldn't want to make predictions further than Q1 at this point, but so far, so good.
Agreed. Brooke, what do you think?
I think it's going to be a stonker every year. But I also have a request. Was that at least appropriate?
That was brilliant.
Good.
It was well used.
I do have a request that next time we have you on, especially for top revenue contributing securities, if you could look at it by investor type or beneficial owner type and how that breaks down. Something we say on this podcast is that some of these names, depending upon whether it's, a large cap, what industry it's in, or whether it's a new IPO name, it can have a difference in terms of contribution across who's likely owning that position. So I think it would be interesting if you had stats across some of the top contributing names in that way.
Yeah, most definitely. I think that's a very good point because I'm always a little bit shy when I introduce myself to people because they either love me because they agree with everything that I say or they hate me because all their clients are moaning at them because I'm telling the world that we've had a record year and everybody's asking where the revenue is. So
Show me the money, Matt. Show me the money.
Well, that's what I
Yeah.
think as well. I can only tell you what the data says.
Good. All right. Well, on that note, I think this was a great pod. Thanks so much for rejoining us and giving us a recap on last year. And we'll look forward to keeping tabs on the data with you throughout this year. We'll maybe check in mid-year again and then do something at the end of the year. If you have ideas for us in the meantime, let us know.
More fun facts.
More fun facts.
And I'm going to send you a list of vocabulary.
Solution.
And I'm going to end by wishing Jim a Happy New Year.
And Happy New Year to you, Matt, if we haven't already covered that. Thanks, Matt. I thought it was interesting too.
Yeah, no,
What's happening?
thanks for the invite. I love coming on. So it's great to see you.
Absolutely.
Cheers, man.
Good. We'll talk soon. Thanks, Matt. Thanks, listeners.
Stonker.
Thanks for listening. And now for our disclaimer.
This material is for your private information and does not constitute legal, tax, or investment advice. There is no representation or warranty as to the current accuracy of, nor liability for, decisions based on such information.